We're taught from day one that the safest path to financial security is clocking in, working hard, and collecting a paycheck. But if your income is tied to your physical labor, you are trapped by basic math. You only have 24 hours in a day. That means your earning potential has a hard, unbreakable ceiling. Yet we see people accumulating massive net worths, generating cash around the clock. If physical labor maxes out, they have to be using a completely different mechanism to keep earning while they sleep. To bypass that 24-hour limit, income must be decoupled from time. This usually happens through 3 distinct channels: scaling a specialized skill, building a business system, or deploying capital. For most people starting from scratch, investing is the most realistic entry point. As of 2026, the gatekeepers are gone. You can initiate a position from your phone today with as little as $10. Financial freedom happens the exact moment you cross the line from a system where you trade hours for dollars to a system where your dollars start working for you. When beginners think of the stock market, they picture shouting matches on a crowded trading floor. Strip away that noise, and the market is simply a storefront where you can buy fractions of real profit-generating engines. When you buy a share, you are taking ownership of a company's future growth. Look at this early Apple computer sitting on a desk in the 80s. Investors who bought in then were acquiring the raw infrastructure that eventually compounded into a multi-trillion-dollar valuation. Backing this operation meant financing the physical expansion of a new supply chain, long before the stock price reflected the true scale of the business. Of course, putting all of your life savings into a single company running out of a garage carries a massive amount of risk. If that one specific business fails, your money disappears with it. That single point of failure is easily neutralized by an index fund. Instead of buying one stock, an index fund like the S&P 500 automatically spreads your capital across hundreds of the top-performing companies simultaneously. Over a long enough timeline, the broad market consistently trends upward. By capturing the average growth of the entire economy, small, consistent contributions build on themselves, accelerating year after year through compound growth. Success comes from aligning with the long-term productivity of the global economy, where the collective growth of the market offsets the inevitable collapse of individual companies. Riding the overall market upward is powerful, but you don't actually have to wait decades to sell your shares to see a solid return. You can position yourself to get paid in cash simply for holding the asset. The real solution to this is dividend investing. Certain established companies take a portion of their quarterly profits and distribute them directly back to shareholders as liquid cash. If you take those regular cash payouts and use them to buy more shares, the cycle accelerates. Eventually, this repeating cash flow can grow large enough to cover your living expenses and fully fund an early retirement. This concept of cash flow extends outside the stock market, most notably into real estate. Historically, property provides a unique combination of long-term appreciation, steady rental income, and significant tax advantages. The old barrier was the massive down payment required to buy a house. Today, modern fractional real estate apps let you buy equity in cash-flowing properties using whatever spare change you have right now. You no longer need to sit on thousands of dollars to access these assets. Modern technology has completely sliced historically exclusive markets into pieces that are small enough for absolutely anyone to grab today. So if the math works, the risk can be managed, and the tools are accessible to everyone, why do the vast majority of beginners still end up with nothing? The failure point is almost always emotional. Investors panic and sell their shares the moment the market drops. They chase whatever viral asset is trending online, and they demand life-changing profits by Friday. Real investing is a decade-long exercise in patience and repetitive automation. It provides no daily dopamine hit, only the slow, quiet compounding of value over thousands of days. The divide between those who build lasting wealth and those who don't comes down to a simple behavioral rule: the order of operations. Most people spend their paycheck on lifestyle first and then promise themselves they will invest whatever scraps happen to be left over at the end of the month. There is rarely anything left. People who successfully build wealth flip that equation. They automate their investments the second their income arrives, forcing themselves to live strictly on the remainder. Your net worth 10 years from now is dictated entirely by the behavioral systems you build today. Putting $10 into a broad index fund every single month is mathematically superior to waiting for a massive windfall. Tell us in the comments below, what was the very first investment you ever made? And if you want to master the psychology of money and learn exactly how to build long-term wealth, make sure to follow us at Deep Mind Hindi.